Hey, Grizzle's back at PDAC. I ran into Mark Bishop-LaFleche. She's CEO of Ecora Resources. Mark, how are you?
Yeah, very well. Good to bump into you.
Yeah, exactly. So I want to start off. We're at PDAC. It's, I think, the largest mining conference in the world. Mm-hmm. Everyone thinks it has value. That's why we're all here. I'm curious to hear from you. Where do you get the most value? Is it those investor meetings, in the closed door meetings? Is it, where you bump into someone, it goes somewhere you didn't think it would go? Some of the knowledge you get from running into all these industry people. What kind of works out for you?
It wasn't an option, but can I say all of the above?
That's a good answer.
Because it really is. I think between the investor quality here in Toronto and globally that flows into the city, the mining sector and the mining execs that are here, more generally everyone around the sector, pretty productive time. We can do a lot while we're here in a very short amount of days.
Yeah, exactly. That's pretty valuable. Ecora is a royalty owner. You don't operate actual assets. So for people who may not know how royalties work, could you just kind of give the high level, the benefits of that model?
Yeah. Ecora is a royalty company. It's listed. We trade in London on the LSE. We trade in Toronto on the TSX. And we trade Ecora through our OTCQX platform in the US. But our business model actually is, we're really investors. Our specialty is to complete mining due diligence and invest in mining projects via a royalty or a stream product. And what does that mean? Well, it effectively, in short, means that if a commodity is produced from an area where we have a royalty, when that unit is sold, we receive a percentage of the price. So it's very different to being a mining company. We don't take operating risk, we don't take capital cost risk.
Yeah.
Effectively, what we are is a proxy for commodity prices that historically have moved with inflation. So let me tell you something interesting about this. 20 years ago, copper was less than $1 per pound. Today, copper is $4 per pound. If you're a royalty company with a 1% royalty, today you have 4 cents, right? If you go back 20 years, you had 1 cent. And I don't know what copper will be in another 20 years, but if you're a mining company, you haven't seen your margins increase by that same percentage by virtue of operating costs and capital costs. So it's a great vehicle for folks looking to get the sector thematic exposure without taking some of the more risky parts of the business, really, which comes down to that we all know and love about mining.
And they have people like you and your team doing the due diligence for them, for people who may not be equipped on their own to do that level of due diligence.
Yeah, I mean, the mining sector is an esoteric space, right? Let's be honest. I mean, what is the difference between the X amount of copper businesses we see on the floor, the nickel businesses? So the royalty model is one that offers relatively de-risked exposure to a sector. This has been proven in the precious space, right? There's a reason why businesses have multi-billion-dollar market caps on the precious side. There are a lot of people who like the ability to get commodity exposure without mining risk. And that, in many ways, is the opportunity for Ecora, given our commodity mix.
Gotcha. So I want to talk about your commodity mix. You have a lot of exposure to some of the key battery metals, that we would call them, and there's a great macro outlook on all of those. Could you just talk us through your exposure and kind of how you see that going forward?
Yeah, battery metals is one way of putting it. I personally would say it's energy transition metals, because that's much more diversified, right? A battery implies one chemistry or maybe 2 chemistries, and the thing is, who knows in 10 years what those chemistries will be. So when we've deliberately and methodically built our portfolio to the thematic, and by that I mean renewable energy production, the transmission of that energy, the storage or consumption of that energy, and all of these parts of the value chain require different commodities. So if you look at Ecora today, it's very different from what it was 10 years ago. When 10 years ago, Ecora was met coal. Today almost 90% of our NAV is future-facing commodity. And in another 10 years, I think that'll be 100% future-facing. But the other thing is there's a bunch of commodities where we need to infill, really to rebalance our portfolio or to add certain exposures. And we've been working away at it, but the key is, as we all know in mining, to pick your entry points, right?
Yeah, exactly. So what would you say the 3 key commodities for Ecora right now?
Copper. I mean, it's taken us a long time, but our copper exposure is arguably second to none in the royalty space. We have a portfolio of projects, not all with the same royalty rate, granted, but into the next decade, we could see our copper exposure go from 50,000 tons today to over 500,000. And that's a piece of Ecora that doesn't get a huge amount of attention. When people look at Ecora today, immediately people are drawn to the P&L contribution. And That's in that regard something important to understand about this business, which is the business has a lot of cash flow in the short term from metallurgical coal and a whole lot of asset value, the vast majority, in the energy transition future-facing basket. So Ecora is sort of a 2 to 3 year story on what we are today and what we're expected to become.
That makes sense. So, I mean, you're going to look a lot different in the future than you look today. And so for some people who just look at, say, last quarter's earnings, that's not the right picture of Ecora.
Look, I think when you look at Ecora, there's two things to note, and I touched on them, but to be really direct. The first is the biggest contributor from a revenue perspective is a royalty that we know is going to run off in 2 years, and that's the steel-making coal exposure. And so the rest of the portfolio, which is, as you mentioned some of the commodities already, but copper, nickel, cobalt, uranium, vanadium, these are all expected to ramp up substantially. So you go from 10 years ago having 100% met coal almost to 0% met coal materially by the end of 26.
Now, as far as you have this exposure, do you see adding to certain of those commodities we talked about, or do you like the mix the way it's looking at this point?
And when we think about Ecora and our commodity exposure, at our core, it's base metals, and at the core of the base metals is copper.
Okay.
Now, the reason personally I really love that, and largely because copper is one of the commodities that has the broadest array of industrial applications outside of the energy transition thematic per se, just as a conductor of electricity, which, in all our everyday lives we use electricity regardless of how much. And the second is it's one of the commodities that's most difficult to substitute. So what we'd love to do is keep copper at our core. We think that's a great place to be. Beyond that, there are other commodities we'd like to add to the mix. We've been very patient on lithium, for example, as we've seen 2 spikes the last 2 years. It didn't really offer attractive entry points, we thought.
So you're circling the lithium industry.
Lithium, if we were to do a lithium royalty, and I'm not saying we'll do one tomorrow, but certainly much better to do a lithium royalty when hydroxide is closer to 15,000 than when it's closer to 90,000. And as a royalty investor, I've said it already, but cyclical entry points matter, and that's one thing we've done really well.
Now, I wanted to dig into one thing you said. You said your copper exposure, it took a long time to get there. Could you expand a little on that? Was that because what you said, you're very disciplined in when you get into projects, and so it takes some time to find the right project for Ecora? Is that?
Yeah. I mean, what we're looking for is really quality ore bodies, and ore bodies that have a really high relative probability of coming into production. Our producing royalty in copper today is owned, the mine is owned by Capstone Copper. We have a second royalty over one of Capstone's near-term development projects, Santo Domingo in Chile. We have a royalty over a copper-nickel operation owned by BHP in in Australia. Vizcachitas, owned by Los Andes in Chile. So we've really gone for really quality ore bodies that are big to begin with, that have potential to get bigger, and a lot of people like copper. So one has to take the opportunity when it comes along.
Gotcha, exactly. Now, there's one thing I want to ask you, because it was interesting. We were chatting offline. You've been with Ecora for a long time, and you've been in the investment role, so you were the one looking at some of these deals, and now you're running the company. What kind of extra beneficial perspective would you say that's given you on just how the Ecora business model works in general?
Yeah. That's, like I said to you just now, the reward for hard work is a lot more hard work, right? Look, when you're a royalty and streaming investor, at the end of the day, this is a financial product. And so actually knowing how to structure what you're telling people and being able to do it quickly, effectively, getting from A to B quickly, making it as painless as possible, for a mining company, there's a lot of value in that. And I think the second thing is all of the deals, bar one, which is an asterisk, but almost all of their transactions have been bilateral relationship deals.
Okay.
And the value here is when you're in the sector for a long time, you can afford to be patient. We can take 3, 4, 5 years to build a relationship with a mining company and be ready when that company decides they want to or consider a transaction with us. Most of what we've done is not sort of someone calls us and says, hey, I've got a royalty for sale. Most of what we've done is, targeting the projects we like and the commodity baskets we look at. And that's really the value of it, having done this for a long time. But the company is not just me. We have a lot of depth on the legal side, on the technical side, on the investment side, finance side, of course. I like to think that we're a really easy group to work with for mining companies and very good at diligence. The other thing is, when I reflect back on the 10 years, yes, sure, we've really transformed this portfolio, and I'm really proud of a lot of the deals we've done. In fact, all of them. On the flip side, some of the deals that we haven't done have been the best successes for the company as well.
Yeah. It's good. That's a good way to look at it too. Yeah, it's the swings you didn't take.
Yeah.
Well, it's been a really interesting conversation. This is Mark Bishop LaFleche. He's CEO of Ecora Resources. They're a pretty interesting royalty company going through a transition, as he said. So we'll be watching what you guys are up to closely.
Sounds good, sir. Thanks for having me.